How to pay for nursing home care with just Social Security income. So nursing homes, I'm sure you're already aware of this, are ridiculously expensive. So the national median cost for nursing home care, $8,900 for semi-private room, $9,800 for a private room. And again, these are national median costs. So half of nursing homes are going to be more expensive, half of them are going to be less expensive. But either way you look at it, nursing homes are super expensive. So how are you going to pay for it? How are you going to pay for that nursing home care? So Social Security does not pay for any sort of care whatsoever. No long-term care, assisted care, memory care, nursing home care. It doesn't pay for it. Medicare might pay for nursing home care. It depends on the type of nursing home care that is needed. So they will pay up for 100 days of skilled nursing care. So skilled nursing would be after somebody has been discharged out of the hospital, because they don't really need to be taking up a hospital bed, but they still need some care for changing bandages, checking on things, stuff like that. So Medicare will pay for up to 100 days of that type of skilled nursing care, but they don't cover any custodial care. So in-home care, assisted living, nursing homes, memory care, Medicare does not cover that. If you're one of the few fortunate people that has long-term care insurance, that is a possibility. That might pay for all or some of the nursing home care that's needed. If you have, I'll say, probably a wealthy family, they may be able to help you, but most families are not going to be able to cough up $100,000 a year to pay for nursing home care. So where most people are going to fall is looking at either Medicaid or retirement savings to pay for nursing home care. So the first option is Medicaid, and that you may or may not qualify, again, depending on your income and asset levels. And then Medicaid also has the ability to lien the estate. So they can, after the last spouse has passed, they can put a lien against the estate to try and recover some or all of the costs that they've paid towards nursing home care. And then there's retirement savings. But as expensive as nursing home care is, it could completely wipe out a couple with their retirement savings, just paying for that nursing home care. And then you have potential tax liabilities from drawing large sums of money out of your retirement portfolio. So let's assume that Medicaid is the only option to pay for care. In this strategy that I'm going to show you, it only works for couples where only one of the spouses is currently in a nursing home or is going to be going into a nursing home. So let's look at the scenario of Jim and Stella, who are both 76. They have $3,800 a month of income. They're making it financially, but things are tight. They own their home free and clear. They don't have any money in retirement savings. The issue is Stella has dementia, and she's become a flight risk, and emotionally and physically, Jim just can't take care of her any longer. It's become a health and safety issue. Stella's care is going to be $9,500 a month at a nursing home, and they cannot afford to pay for nursing home care. The good news is that Stella qualifies for Medicaid. However, Medicaid will require Stella's Social Security income to go towards the cost of care. One exception to that is the minimum monthly maintenance needs allowance, and that will allow Jim to keep $465 of Stella's Social Security check. And so Jim will have a monthly income or household income of $2,465 a month while Stella is in the nursing home. When Stella passes, Jim's going to lose that $465, and he's only going to have $2,000 in household income. So Jim is going to be financially strained both while Stella is in nursing home care and also after she passes. So Jim called me about getting a reverse mortgage as a way to supplement his income both while Stella is in nursing home and after she passes. Now, I have to say that Medicaid benefits, qualifications, and requirements are going to vary from state to state. And so you really need to consult with your state's Medicaid agency and an elder law attorney before proceeding with a reverse mortgage. So we ran the numbers for Jim and we came up with a couple different options for him. The first one is to start drawing $1,000 a month once Stella enters into the nursing home. That is represented by this bar chart here. The blue represents the home value. The orange represents the loan balance, and we can see that loan balance is increasing. The reason the loan balance is increasing is for two reasons. One, Jim is drawing out $1,000 a month out of the line of credit, and so therefore every time he draws money, it gets added to the loan balance. Secondly, we are assuming that Jim is not going to make a monthly mortgage payment towards the reverse mortgage. And because Jim's not making a payment towards the reverse mortgage, the interest and mortgage insurance are getting added to the loan balance. Jim still has to pay his property taxes and his homeowner's insurance. The green represents his line of credit. And he's starting off initially with a $166,000 line of credit. And we can see this line of credit is actually growing over time. And that may sound weird, especially since Jim is pulling out $1,000 a month or $12,000 a year to cover or to supplement his income. The reason that that's happening is because any funds available in the line of credit are actually growing at the current interest rate plus 0.5%. So basically, Jim is pulling out a little bit less than just the growth that's happening in that line of credit, and that's why that line of credit is growing over time, which is pretty awesome. The second option is for Jim to draw out $1,250 a month once Stella enters in a nursing home. And again, the numbers are basically the same, except for the loan balance is growing a little bit faster, and the line of credit is actually getting reduced because now Jim is pulling out a little bit more money to draw down on that line of credit. And so, but he still has an estimated $92,000 in 15 years when Jim would be 91 years old. The third option would be for Jim to pull out $1,500 per month when Stella enters in the nursing home. And again, the numbers are the same except for the loan balance, which is growing faster because Jim's pulling out more money. And the line of credit is going down faster as well. And in fact, in 15 years, Jim's expected to only have $10,000 left when he is 91. So those are three different options. So Jim has the ability to draw as much or as little as he wants when he wants, but to be consistent and be able to supplement his income, he could pick from any of those, or he could draw less if he wanted to. He could draw more, but if he draws more, the money's not going to last as long. Now, there are some things to consider with Medicaid. So most states do not consider reverse mortgage proceeds as income, so that's really beneficial, especially when couples are trying to qualify for Medicaid. The issue, though, is that the proceeds from the reverse mortgage can count towards asset requirements. So, again, depending on the state, but generally, an individual can only have $2,000 of liquid assets, and a couple can have $4,000. But if you pull money out, you've got to spend it, because if that money stays in your checking or savings account, it can count towards the liquid assets, which could then disqualify you from Medicaid. So it's important that if you draw money, that it gets spent. Couples should generally wait to get a reverse mortgage until the spouse is approved for Medicaid. And then if there are cognitive issues such as dementia or Alzheimer's, generally a guardianship or a conservatorship will need to be set up. This could take several months to get done through the court systems, and it can cost thousands of dollars. So there's things to consider with Medicaid. And again, the issue is that the benefits, qualifications, and requirements, they're going to vary from state to state. So you really do need to contact your state's Medicaid agency, and I would also recommend speaking with an elder law attorney before ever proceeding with the reverse mortgage. Now, you can look at it, see if you guys would qualify, how much money would be available, different ways you could structure it, but before moving forward, you would definitely want to get more information to see if the reverse mortgage would impact your qualifications for Medicaid. So you just saw several reasons to consider getting the reverse mortgage. First and foremost is the ability for Jim or yourself to supplement your income once Stella or your loved one has moved into a nursing home, because again, Medicaid is going to be taking the bulk majority of the spouse's Social Security check in order to help pay for the nursing home care that they need. Secondly, it creates financial stability for the remaining spouse through the reverse mortgage proceeds, not only during the stay at the nursing home care, but after that spouse has passed. Now we have an additional source of funds to help supplement income, putting them in a better and more financially stable situation. And then finally, it creates peace of mind for both spouses, knowing that once the other spouse has passed, that even though household income has been lost, that there is a source of funds for the remaining spouse to be able to supplement their own income, and then also a source of funds to help pay for other future financial shocks such as healthcare, long-term care, and or home maintenance. So again, creates peace of mind for both spouses. Want to see if this would work for you? Give me a call. There's no cost to speak with me. There's no obligation to speak with me. Happy to put some numbers together for you, run some different scenarios to see if this would make sense for you. And I look forward to speaking with you. Thanks.